Well, results out from private hospital group Netcare this morning show a 5% drop in group revenue to just over 11 billion rand for the 6 months to March as the rand strengthened against the pound. Adjusted basic headline earnings a share rose 28% to 42.9 cents, but stripping out the currency volatility, they were over 32% higher. Joining me with more now is CEO Richard Friedland. Richard, thanks for coming in this afternoon.
Pleasure.
Of course, there's all this traffic around Sandton this afternoon, all the parades with the security services and the police. So quite difficult to move around, isn't it?
Absolutely.
Richard, currencies must play havoc with the numbers, and you point out in the commentary that the average exchange rate went from almost 15 rand to the pound to about 12 rand to the pound, and that's a big swing and must have an impact on your numbers, mustn't it?
Well, it has, and so if you look at our results, we're down 5% on revenue, but in real terms, we're actually up 4.9%. So it's a swing of 9.9%. Similarly, on EBITDA and operating profit, you're seeing decreases of about 12% swing as a result of the currency. We haven't hedged our UK exposure, and so we win on the swings and we lose on the roundabouts, and we're not concerned about that at all. We've seen a lot of pound weakness and the rand appreciating. On the positive side, our debt is down as a result by some 16% as a result.
Well, I was about to point out, so that was quite fortunate for you. And of course, the revenue split, 6 billion coming from South Africa, 5 billion from the UK and everywhere else. Do you see, are you going to maintain that balance, or do you see the UK beginning to play a more important role?
Well, the UK traditionally, when the pound was stronger, was slightly higher in terms of revenue and operating profit.
Okay, so again affected by that.
And so now South Africa is slightly stronger. So we don't put too much emphasis on the currency, but it is a feature of these results, yeah.
Now, are you looking for a particular split in revenue between South Africa and your other operations?
Not at all. We are the #1 player in the private healthcare sector in the United Kingdom. We're a very large player here. We want to grow that network. It's an extremely important strategic investment. If you look at it today, it's earnings accretive for us, and that takes into account our initial investment of some 2.5 billion rand off the South African balance sheet and the finance charges associated. And if you look at its performance in the last 6 months, given the recessionary environment, high unemployment and almost nil inflation, it's quite a phenomenal result in the United Kingdom.
Of course, you did point out net financial expenses down by almost 20%, lower interest rates helping there, lower debt. I mean, do you see as interest rates start to stabilise and head up again that we're going to see those net finance charges picking up?
We are a large portion, or the tenor of our debt is short term, because we've understood the benefit of these interest rates coming down, and now as we see it bottoming out, we're probably going to switch into long term. And long-term rates are the cheapest they've been in a while. So hopefully we're going to maintain it.
And they'll probably stay there for quite some time to come as well. So just looking at the growth that you're seeing both in South Africa and in the UK, of course we know in the UK a new government just came in last week under pressure to cut spending because of the massive deficits in that country. Do you think that the National Health Service will suffer as a result of these cuts, and could that play in your favour?
I think it would definitely play in favour of the private sector. I think the private sector or independent sector is extremely well positioned to assist government in delivering healthcare. Already we're seeing very large volumes of NHS patients under choose and book, where the NHS is unable to treat them in 18 weeks, coming to the private sector. I think what we will see austerity measures in the UK with a coalition government that was always questionable. Now that they have a 5-year agreement, this looks more likely, and we think we can play a very significant role in delivering healthcare as the NHS and indeed public services come under pressure.
Does the new government perhaps create a little bit more uncertainty for you in that market though?
No, I think a hung parliament initially would create uncertainty, because no coalition wants to take the kind of tough medicine and austerity measures if that coalition doesn't have a long lifespan and they don't have 5 years to implement. I think what the Conservatives and Liberal Democrats have done is to say this is for 5 years, so it will give them time to see many of those changes implemented.
Of course, here at home we also have a public sector that is struggling, more people joining medical aids, and that must be good news for you as well.
Well, I think there is a huge demand for healthcare in South Africa. I think there are some very positive developments through our own Department of Health, a very strong focus on primary healthcare. We've got to get the basic foundation and building blocks right. We've got to look after children's vaccinations, maternal care, as opposed to worrying about that too late down the line with hospitals and tertiary care. And I think the focus now is a very important one being emphasised by our Minister of Health.
And what's the role of the private sector in all of this, and how do you see the role of the private sector developing?
I think that healthcare reform is an absolute necessity. We have a wide gap between the haves and have-nots. It's not sustainable, and we can't build a healthy and sustainable nation unless we address this issue of universal care and healthcare for all. And I think we are well poised to play a role. If you look at NHI, in all economies where it's been successful, the private sector has played a very important role in that. And
of course, you have been setting up a number of public-private partnerships. Do you see those as the model going forward, and will you continue to focus on these triple Ps?
Very much so. In Lesotho, we are opening up officially our 3 primary care centres this month. Our new hospital, 420 beds, opens next year. I think the world is watching one of the poorest countries in the world and one of the smallest nations lead the way in public-private partnerships. We'll be running all the clinical services, employing the doctors and nurses, running the primary care and the tertiary care. It's an incredible model. And if we can roll that out in Africa and indeed in our own country, we would be we think that's a very positive move.
What sort of scope for growth do you see in South Africa for those public-private partnerships?
We think that's enormous. We think we can partner government in a very real way, in a way that is not paternalistic or patronising or threatening of government services, but the private sector, as we are now doing in the UK, close on 13 to 15% of our volumes are from NHS patients. Some of the other private networks, it's as high as 50%, and in others it's close to 30 or 40%. And there is a very good model of public-private cooperation and interface, and the patient ultimately is the winner.
Of course, you mentioned in Lesotho how you were staffing those hospitals and clinics with medical staff. Do we have the medical professionals we need in South Africa, and what are you doing to ensure that going into the future there are enough doctors and nurses to operate in those hospitals and clinics?
I think training of medical and healthcare personnel is the key rate limiting issue for us in South Africa. You'll have seen from our results, we've celebrated 21 years of training in Netcare. This year we're training 3,500 nurses. It comes at a very significant cost. It's impacted our results, but it is critical for all of us in the public and private sectors to increase the number of people being trained, and we're absolutely committed to that.
Of course, increase and retain them. How do you retain them into the future though?
Through a number of mechanisms, but clearly in a market where there is a there's a great imbalance between supply and demand, that becomes increasingly more difficult.
Richard, we're almost out of time. Just quickly, what do you expect for the second 6 months? Obviously a good first 6 months, slightly impacted by the pound, and of course we don't know what will happen to the pound in the second 6 months. How would you expect your profits to go in the next period?
We're retaining our guidance that we gave to the market in November. 7 to 10% growth here in South Africa. We're looking for margins of 17 to 18%. We've announced an enormous capital expenditure program this year, just under $1 billion, and another 700 million next year. In the United Kingdom, margins will be flat, although we've grown them slightly, and limited growth there, although we've demonstrated good growth for the first 6 months.